Hello, everyone. And what is momentum trading? Momentum trading has to do with you taking advantage of the market in a very, very easy way. How do we do this? Well, right now, the way the market is behaving, it is thinking that somehow we need to make sure that earnings are okay. I told you that a couple of days ago that this is what the market is looking for earnings, right? So now it is getting the earnings. So, look what happened with Microsoft. Look what happened with Alphabet. They got the earnings, but now the market is saying, oops, you know what? I am a little bit worried about the fact that you're spending too much money on AI. Join my channel, like what you see, and don't forget to join the Patreon channel as well because you get to see all of my trades. So, what are we saying? What are we calling this thing? What is this momentum trading? How how do we work on it? Well, what it is that you need to make a few things very important for you in order to make that money. You need to grab the momentum. I mean, it could be easy money, but it'll also be very careful. So first of all, you have to pick up a stock that's going to move. So basically, we're not waiting. We're not trying to guess. We're not trying to guess if it's going to do well or not. Like for example, today we have QQQ. We have a couple of companies releasing its earnings, right? Especially the tech companies. So what do we do? Do we go ahead like we could have done with Tesla and would have done very well? Or do what we do is we simply wait to see the momentum. Why do we do this? Because the market is very uncertain. The market is uncertain. I don't know what it's going to do, quite frankly. I am concerned. I want to make some money, but I'm not so sure if I know exactly how it's going to behave, right? So what you do is you wait for it to start moving. Now, yesterday we did that with VMC. I mean, the thing went up 400%. We caught up 20 to 30% in one day, which is not bad because you want to see that's happening. So, what does it mean? First, you need to pick a stock that moves. Today, maybe when Amazon or when some other large stock is going to release its earnings, you're going to benefit from it. Okay. The second thing is you want to make sure that the fundamentals are here, that you have good earnings, right? You don't want to be disappointed. Of course, you want to make sure the market is friendly. There's not nothing really bad is going to happen. Some oil prices change or you're waiting for a rate cut today. You don't want you want the environment to be as low and as comfortable as possible. And then what you can do, depending what you want to do, you could be a bunch of cash and buy stock and profit from it. If it goes, by 1,000 shares, and if it goes up by $1, then you make $1,000. Or you could also go for a short dated call option, something that's going to expire in 2 weeks, and that's what you do. You buy a call for that short period of time. But whatever you do, you got to watch this thing very, very closely. You don't want it to get away from you because this is kind of what happened a while back. I did the trade on Tesla, and I was hoping for it. I was doing it. I was investing before the robo taxi, and of course, the robo taxi got away from me, and then it took a while to get back. And even though the trade went down all the way down and Tesla went back up, yeah, I mean it gained 20-30% in one day. The only problem is I just got back what I lost because I was doing it too early. Let me show you what I mean specifically in terms of that trade. So let me share with you. We did this, right? So VMC announced some decent earnings. It was a bit of disappointment. uh, I mean, the company is still growing, but it's just that, as you could see, it opened up and right away it opened very strong, and it kept on going strong. And I'm saying, you know what, this is a momentum going on here. The company is doing well. The market was kind of steady, So we went in around 10, I think it was like 10:45, and we rode it. We rode it for a while. It was a little bit concerning because I saw this dip in the momentum. So that's what I mean, that you need to watch it very carefully. But as it drops right here, a little bit nervousness. But then, because we have momentum with us, and of course, you need a bit of luck as well. I hate to say that. I know exactly what luck is about. Luck is about what you don't know, and this is exactly what's happening here. Basically, we kind of rode it back here, and then we kind of, you know what, left it. I think I left it around 1 o'clock, and it kept on growing a bit more, and it kind of ended up there. So what's going to do today? That's kind of a tough call now because it's kind of high already. Remember, if you look where we are on something like VMC, and I'll have more of that on my Patreon channel for my paid viewers. But you see, we're up there, right? So that's a tough call right now to make, especially for a short daily gain. You're asking for trouble here. You could be exposed to anything in the market, right? Let's take a look at the Tesla. This is interesting. Stay with me for a second. You're going to see it's going to be very interesting. So this was, remember, the October 10th, right? So I'm saying, well, how bad can it get, right? I mean, right. Hold on. Stay with me. Yeah, October 10th, right? Right here, I said, well, there was a bit the dip here. I said, well, how bad could October 10th be? So this is for the Tesla robotaxi event. Was not momentum trading because we went in just before we tried to catch it. We tried to catch a 300% gain for one day, which was too greedy because the market didn't like what they saw. There was no numbers, and we just got killed. Now, of course, on that option, and it was a January option. Now, of course, we had to wait all of that time while it was just dying, and then earnings came out, and boom! See this right there, and then we got out. But the gain, there was no gain really. We just got what we got what we lost at that time. So this is not momentum trading. This is some other kind of trading, which I will describe to you later on. So that could be very lucrative, because as you could see, if I show you my Patreon channel, right, you could see, we did that on Tesla yesterday, 3,000%. We did that on VMC, and it could be interesting. It could be most interesting. Now, the thing is, we are in a market that is very, very volatile. And what I mean volatile, right? I want to show you what the VIX is, and you need to follow that one as well. Right? The concern, right, is that you see what's happening with the VIX, and basically the VIX is a composite of lots of options trading, call and put option, to see what the market is feeling ahead of time. And you could see that the VIX is creeping back up again. I mean, it doesn't have to be a bad thing. It's a fear factor. It doesn't mean the market's going to crash. It just means the market is very concerned. There's a lot of puts have been put on the market just to hedge themselves. The market likes what he sees, but it's being very nervous. I think the closer you get to November 6th, the more volatility you're going to have. Now, as you could see right here, in October, we went as high as 27. Right? Now, I don't know if you remember what happened in August, right? Remember August 10th? Right. So this was August 10th. So we've come down, right? We went back up with the fear factor, came back up because we had the September situation with the Fed at that time. This was the Asian trade. That was a black swan. Nobody saw it coming. Okay. Then this is September 15, which is the Fed, and of course we're gonna have another Fed meeting soon. And then we had again October 7th, 8th, another situation drop up here. Then when we came down again, but now it's creeping and back up again, and I would expect it to creep back up again because of the Fed situation. I mean the elections. Okay. So what does this all mean? Well, it means many things. It means that the market tends to create its own story as it goes along, right? First it wanted inflation, then it wanted recession, and don't forget today we had some interesting number coming out. Um, let's take a look at it right now because we had some PCE, we had some. Let me show you exactly what I'm talking about here. So let's go back to the screen and let's spend some time understanding what it is that we have facing us at the time being, right? So what do we have? We have right here, look at the numbers for the initial claims. 229, they were expecting 229, they got 216. So claims are a little bit coming down a bit. We have the PCE. Look at the PCE. PC is in line. No, this is the inflation kind of number. So slightly up, slightly in line. What does that mean? Well, essentially means that inflation is under control, which is what I always said. Inflation is under control. I wouldn't worry too much about it. But still, the market feels very red right now. And of course, what does it feel red? Well, look, Microsoft, Nvidia, Google, Meta, Amazon, they're all getting hit right now. And why are they getting hit? They're getting hit because the market feels that they're spending too much money on AI. I thought AI was good. So I guess now we're spending too much money on AI. So I guess that's not good. You see what I mean? So you got to be very, very careful about this market right now. It's very unstable. So, I mean, it's a great opportunity because as the market is dropping, you could pick up some very good tech names. You could pick up some good tech names very cheap. If you do momentum trading, then you got to make sure that you follow it. You got to make sure you understand it. You have to make sure you know the name. What I mean by the name, you need to understand how it trades. You need to understand how the stock itself moves, independent of its financial, because while there is the correlation between the way the stock moves and the way the earnings and the credit, it does not mean that there is causation, right? Don't forget, the most successful investor was a mathematician. What does that mean? It means that he was able to predict prices purely on the way they move. Samuel, we have Mandelbrot, and we have Taleb Nassim, basically saying you're not here to try to make money by predicting moves. You want to make money by making sure you're protecting your portfolio, you're protecting your position, because you could be doing all that work and you trying to understand everything, and then you have a 7% drop. And look at the video that I did a couple of days ago on a potential market drop. There is a lot of possibility that we could have another 7% drop. Even though the likelihood, as measured by a standard statistical measure, basically states that doesn't have to necessarily happen all the time, right? So it could be happening because the market moves. Right? So how do you deal with something like that? That's a question, right? How do you deal with a market that is moving in a way that you don't understand? I'm trying to understand so I could predict it. Maybe you could predict it like yesterday, 6,000%. I made 6,000% on one trade, 3,000% on another trade, very quick, right? I mean, annualized, obviously. And it's good because it's very risky. I know it's very risky because, if you get it wrong, and your option is too short, you don't have time to recover and you lose everything. But I think that with 6,000% annualized, I think I got paid for the risk that I took. And that's at the end of the day, you want to make sure you're getting paid for that risk. You want to make sure you understand the risk. And the risk, unfortunately, is one thing that the market that most pundit, that most investors don't get right, because we don't know how to measure the risk. You can't. I mean, what is the risk of Tesla? You could look at the beta, but the beta measures a very specific notion of risk. Without getting too fancy, it basically measures the systematic risk. But the systematic risk is not the most obvious thing to measure because it assumes that all other risks have been removed. Don't worry too much about the detail, but basically understand that there's a very small notion of risks out there. But how much money you could make, that you hear all day long. They tell you all the time, this is how much money I made. This is a return, the monthly return, the quarterly return, the annual return on NVIDIA. If you had NVIDIA $10,000, a year ago, you'd be a millionaire today. So that is easy thing to do. That they tell you a lot of. But what they don't tell you is how much risk is involved. Because A, you wouldn't understand it. B, do they really want to give you the secret sauce? No. Okay. So today, momentum trading is a safer way of doing it, safer, by waiting for the stock to move, by grabbing it on the way out, assuming everything else is, the coast is clear, assuming you've got some risk, assuming you're watching what's happening in the kitchen, and assuming you don't get too greedy, you're out. You're in and you're out. That is the way to do it. Now, the thing is, you got to keep doing it over and over and over and over. But at least you're in and out. Do you want to be in, riding it, and then you get that 7% drop? That's not going to help you, right? So at the end of the day, we need to find ways of doing it. So if you want to see all of my trades, you see what I'm doing, what I recommend you do is you join my Patreon channel, and you get to see a little bit as to, I have a market commentary every morning. I show you all my trades. I show you all the stocks that I'm looking at. So to help you think, right? Because this thing, there's no gimmick, there's no secret sauce, right? Do it this way and this how it works. No, it's like education, right? You have to be educated. You need to educate in finance. In this case, you need to be educated on the way the stock moves, educated on the market move, educated on what are the trends, what are the stories being told right now. Originally, it was a inflation recession story. Now it's more of a earnings stories, but it's earnings stories mixed with some sort of concern about the election. So now they're saying, yeah, I've got some earnings, but you know what? You're spending too much money on that. I'm concerned about the next time's earnings. So it's a very nervous market, very dangerous market. Now, could we have a crash? No, you're not going to have a crash. Simple reason is, there's no recession. Companies are making money. Having said that, be careful, because we still have this thing in the back waiting for us, which has to do with the national debt. And of course, there's also this black swan running around, right? The black swan is flying, walking around. We don't know what it is. It's going to hit us at some point when nobody's talking about it. Remember COVID, right? He's going to be around. What you want to do is you want to protect against the black swan. Always remember, I have always some position just in case the market collapses tomorrow. You get to profit from it. So hopefully you have a good trading day today. Watch QQQ today. Watch QQQ, and I'll be back.